Mastering business interruption insurance. Intangible assets are left vulnerable without tailored business interruption insurance coverage. How can a business interruption insurance policy be tailored to provide coverage for intangible assets, such as intellectual property, in the event of a business disruption? Business interruption insurance policies are typically designed to provide financial support to businesses in the event of an unexpected disruption, such as a natural disaster, fire, or equipment failure, which can impact their ability to operate and generate revenue. While traditional business interruption insurance policies focus on tangible assets, such as physical property and equipment, it is possible to tailor a policy to provide coverage for intangible assets, including intellectual property. To provide coverage for intangible assets, such as intellectual property, the policyholder and insurer must work together to identify and quantify the potential risks and losses associated with a business disruption. This may involve conducting a thorough risk assessment to identify the types of intellectual property that are critical to the business, such as trademarks, patents, copyrights, and trade secrets. The policy can then be tailored to provide coverage for the following types of losses. 1. Loss of use. In the event of a business disruption, the policy can provide coverage for the loss of use of intellectual property, including the inability to use proprietary software, loss of access to confidential information, or the inability to manufacture products due to the loss of trade secrets. 2. Recreation costs. If intellectual property is damaged or destroyed, the policy can provide coverage for the costs associated with recreating or restoring the intellectual property, including the cost of redeveloping software, redesigning products, or recreating proprietary information. 3. Loss of revenue. The policy can provide coverage for the loss of revenue resulting from the inability to use or exploit intellectual property, including lost sales, lost royalties, or lost licensing opportunities. 4. Brand protection. The policy can provide coverage for the costs associated with protecting the business's brand and reputation, including crisis management and public relations expenses, in the event of a business disruption. 5. Legal and consulting fees. The policy can provide coverage for legal and consulting fees associated with protecting and defending intellectual property rights, including patent infringement lawsuits or trademark disputes. To ensure that the policy provides adequate coverage for intangible assets, the policyholder and insurer should work together to 1. Conduct regular risk assessments to identify and quantify the potential risks and losses associated with a business disruption. 2. Establish a valuation methodology to determine the value of the intangible assets, including intellectual property, to ensure that the policy limits are adequate. 3. Define clear policy wording to ensure that the policy provides clear and concise coverage for intangible assets, including intellectual property. 4. Develop an incident response plan to ensure that the business is prepared to respond quickly and effectively in the event of a business disruption, including procedures for protecting and defending intellectual property rights. 5. Establish a claims process to ensure that claims are handled efficiently and effectively, including procedures for documenting and valuing losses related to intangible assets. By working together to identify and quantify the potential risks and losses associated with a business disruption, and tailoring the policy to provide coverage for intangible assets, including intellectual property, businesses can ensure that they are adequately protected in the event of a business disruption.